Hi, everybody, and welcome to the Executive Buying Weekly Market Wrap for April 7th, 2017. I just wanted to get right to it and see and show you guys exactly what we were able to find for the successful insiders. We're adding G3 Apparel Group to the focus list. The NASDAQ symbol is GIII, and we're adding that at $24.43 with our projected target at $34 and our projected risk at $19. This is a company in which the CEO, Morris Goldfarb, had purchased a total of about $900,000 worth of the stock, around 22 bucks a share, just this past week. And what was interesting about his purchase is the last time he bought shares of this company was back in September of 2011, which is, if you take a look at the price here, you actually saw a bit of a flat market, and then all of a sudden we had a huge run up. He was up over 100% in just over 1 year from when he bought his shares. And now we're starting to see this precipitous decline from upwards of $70 down to $20 and change. And he steps in again and buys shares. So it's a good sign that somebody who's been previously really successful with this company, who's also the CEO, is stepping in and buying shares. Now, what we did was obviously we put in our risk target. So in case this downtrend does continue and the CEO can't call the bottom, we'll be able to get out without getting hurt too bad. The second thing that I wanted to touch base on was some of the companies that we had to remove from the focus list this week. Not a great week for the newsletter. We had a company called SJM, or Smuckers was the company, and we put this on a while back. And as you could see, we have a pretty rough downtrend here. And that's something where at some point, I don't care who you are, you have to say that, you incurred enough risk and it's time to get out. And that's exactly where we're at with SJM. And we also had the same situation happen to us where it hit our risk tolerance in Akamai Technologies. So AKAM is the symbol that we're looking at here, or the stock we're looking at here. This stock has treated us very nicely in the past. We've followed these insiders successfully two or three times in a pretty big way. But this time it just didn't work. It's not working. I'd rather, move to the side and maybe put that money in a better place that will treat it better. So, not a great week for the newsletter because we do have two losers that we're taking off the focus list. However, I'd rather take off the smaller losers than leave them on and whistle past the graveyard because, as you know, if you're not looking to take off small losers, you'll eventually take off the biggest loser possible, and that's no fun either. So we got to try and keep our risk managed, and that's why you just got to acknowledge the fact it's not always going to be peaches and cream. We may have a bad week, may have a bad 2 weeks or three, but overall, the fact of when you follow what these insiders are doing, you tend to do way better than the average investor can picking on their own. Now, off to what the markets did for the week. It was a pretty boring week, other than the overall announcements from the government and the Fed, and then the geopolitical events that were happening. So just kind of looking at this hourly chart of the spiders, which is the ETF for the S&P 500, what we'll see here is if you take a look at this, we kind of opened the week pretty much where we closed, had a little bit of a down and then uptrend for a couple of days here, and we started to really break out to new highs, and then there's a bunch of reasons why the end of the fifth we actually saw a nice decline here. A lot of people were saying is because Paul Ryan came out and was talking negatively about the timeline of getting the tax uh, reduction or tax cut passed. Then, as we continue to move in, one of the things that this chart is not showing you is Thursday night into Friday morning. We obviously had the missiles that we put out, a missile strike on the Syrian air base for the United States. And that actually had our futures down as much as about 120 points the night before we recovered and wound up closing the market pretty much flat from where we started. Overall, the S&P 500 was down 0.2%. In the mix of all this, we had the jobs number come out this morning. The jobs gains were 98,000, a little bit less than expected. The jobless rate is 4.5% of the unemployment rate, and that's essentially full employment. So, we could probably hopefully get it better than that, but that's about normal for a pretty good economy. The other thing that we ran into this week was the Fed minutes, which were saying the Federal Reserve was really seriously considering shrinking their balance sheet, which would mean not going out there and putting as much stimulus into the market and really trying to actually do almost the opposite of that. So we'll kind of see how that goes and whether they do it or not. I know always we have the meeting between President Trump and the president of China, and we also have North Korea always lurking around. So there's a lot of things to be scared of, but the reality is this market has gone up through the invasion of Ukraine, through the Greek debt crisis, through Britain exiting the European Union, through a lot of things. And the reality is, only price matters. Doesn't matter how scared you are or how confident you are. If the price isn't going our way, just like in Akamai and Smuckers this week, we have to make a decision to get the heck out of there. If it is going our way, you're probably going to make more money by letting it run. Now, I know there's a fine line between being confident and greedy, but the reality is that you have to try and stick with the winners and cut your losers as soon as you determine they're at a spot where they would present themselves as being a loser. So moving into next week, basically mid to late April is when we're going to see the big part of earnings season start. So I think that could be the biggest catalyst that's up ahead that we could see right now. And the did you know part of the video today, one of the interesting things about this was if you take a look at Tesla, which is actually a company we put on the focus list at 262, it's now at 302, so it's doing quite well. But Tesla now has a market cap that is bigger than Ford. So you're talking about a company in which has actually grown just recently from 180 back in November to $300 and has a $49 billion market cap, whereas Ford has a $44 billion market cap. So a lot of people call that like a cult stock or just a stock that everybody loves because they love Elon Musk and so on. Once again, I don't know why Tesla is going up so high on the fact that it doesn't sell as many cars as some of these other companies. However, I love the fact that the price looks good. I love the fact that Elon Musk is buying shares. So, let's stick with winners. We have about a $400 price target on this thing. If it does work, we'll have a tremendous winner. If not, if you guys just love making money and want to lock in profits, that's obviously up to you. But I just, I think there could be a potential big mover on this one. So I'll keep in touch as far as trying to track which insiders are buying shares. And we'll just keep on plugging away here. Like I said, just stick with the videos for the long run. I think it'll add a lot of value to you. So have a great weekend, and I appreciate you checking in. Thank you.